Hey, my name is James Nicholson and welcome to my YouTube channel. Good news, interest rates have finally dropped. It's been 4 years since the last interest rate drop and we've got all of the details in here. What does this mean for you as a mortgage holder, maybe a renter? This is going to have big repercussions. Maybe you've got credit card debt, that will be impacted as well. We're going to talk about all of that and more. But first, look, we're going to celebrate because we've wanted this to happen for a long time. Let's face it, if you're a property investor. Now, I made a video a few days ago. 60 people commented on that. Most of you said I was totally wrong. No chance of interest rates going down. Well, I actually do research these videos thoroughly. I look at lots of different sources, about 20 or 30 different places. I don't just pluck numbers out the air. And the last video a couple of days ago wasn't my opinion. It was the Economist's opinion. And they were right. 80% of them were right. The Bank of England has finally cut rates. Now, it wasn't a big cut. It was, as I said, it would be as well. I said it would be 0.25% cut, which is what you're going to see in a lot of places when the Federal Reserve also cut. They're not going to knock off 1%. They're going to start softly first unless something major has happened. So what have we got? We've got rates that have gone down from 5.25% back down to 5%, which is really, really good. And there's a lot more. I'm going to give you the breakdown on who voted, on what was the vote split and stuff like that. So before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification and smash the like, tickle the like, do something to the like button. If ever there was a day to hit the like button, today is that day. Just to recap, I'm James Nicholson, just in case you've just found this channel. I'm currently on holiday in the south of France, hence it's a little hotter and different surroundings. Normally I'll be in front of a whiteboard. It's a bit more beautiful looking back here. I decided not to make it in the car for you guys on this occasion. So last time rates were cut was March 2020, a long time ago, just when the pandemic started. I'm going to carry on drinking this beer as well through this. So March 2020 was the last cut. And rates went up 14 consecutive times. Now, I'm sure you know that was to curb inflation. Inflation has now been below the 2% target or at the 2% target for the last 2 months. The concern was that inflation will come roaring back at the end of this year. I've watched all of the Bank of England press conference today. I've read all the minutes of the notes. They still think inflation is going to come back, but it's not going to come roaring back like they may have thought initially. A lot of that is down to economies are softening. Potentially some will go into recession and jobs losses are increasing at the moment. And China is being hit really hard. They're actually in deflation at the moment, and because China output is much lower at the moment, that means oil prices are going down, which means that the chance of a bad spike in inflation have been reduced as well. So the decision, last month, there are 9 people on the Bank of England policy committee. Last time we had 2 of them voting to cut rates and the rest were looking to hold or increase rates, mostly hold. This time it's a fairly tight one. 5 people voted to cut, 4 people voted to hold. So that is still fairly tight. So as we've said in the news and as the markets were predicting, it was 50-50 today. Good news for those of you on a tracker mortgage. If you're on a tracker mortgage, that will go down immediately. So that's going to help a few 100,000 or if not a few million people that maybe are on tracker mortgages at the moment. That's potentially very, very good. They gave some stats about how many people are left on the good lower rates. There's a third of people that have mortgages at the moment that are on the lower rates, and they're all expected to come to an end by the end of 2026. So that's 1/3 of people that are on a rate of less than 3%. So that's something that we want to keep an eye on. So they're going to come out on a somewhat more expensive mortgage, but not as bad as it could have been. There are rates below 4% with higher fees and stuff at the moment, and probably we'll see some better rates. What have the Bank of England been talking about? Service inflation. They talked about that. They didn't talk about Taylor Swift as the media does, but they said that a lot of the service inflation that happened in the last month or so was related to hotels and restaurants. They saw that as a temporary thing, and they don't feel that that is something that they're too worried about, but they still want to keep an eye on service inflation and make sure that goes down. Wage growth was discussed as well. And so what's happening with wage growth? They were asked particularly about the government are putting up the government departments' wages by 5 to 6%, like NHS and stuff like that. I think that's good. But is that going to impact private sector wages? The Bank of England do think that that will actually have some sort of impact on wages. But on the whole, they feel wage growth is slowing as well, which is pretty good. One thing that they're saying is even with the rate at 5%, that is still restrictive, meaning bad. It's not good. It means it's difficult for people. It means it will push down inflation and slow things down, slow the economy down, or at least throttle the economy a little bit. So we're still in that restrictive territory, which they feel eventually we will get below. They feel that 3.5% will get us out of that restrictive territory where the markets and the economy can start roaring again. So that's interesting to see that they still feel that. People were talking about when will the next cuts come? Because obviously we've had one cut now. Is this going to be a continuous thing? The Bank of England won't give that away exactly, but what is expected is that we probably won't cut again in September. We'll have a wait and see what this cut did, because it takes a few months to feed in, and the next cut is priced in for November now. So that's interesting. Now, mortgages. Is your mortgage going to get cheaper because the Bank of England's cut? Not necessarily. So you've already had a lot of mortgage cuts in the last month, especially in the last 2 weeks. Mortgage rates have been cut with NatWest, Santander, HSBC. If you need to know all the people that have done that, I actually did a video yesterday, which you can go and check out. And you can see all the lenders that have cut rates. There are some headlines today the lenders have cut rates because of the Bank of England. That's actually incorrect. If you go and watch and read the news, the lenders that they talk about cutting rates today, they actually cut yesterday, but the rate didn't go live until today. All of the people that they're talking about in the news today, I actually talked about in yesterday's video. So they were expecting the Bank of England might cut, but it isn't to do with that. They wanted to get marketing headlines ahead of the news yesterday, so that's why some of them cut yesterday. Now, do I think that more mortgage providers will cut interest rates because that's what you really want to happen? I think marginally, but I don't think it's down to the Bank of England cut. It's more down to the market is quieter at the moment. We've got nationwide data out today that said house prices are up again, which is good, but the market is slow. The transaction volume is slow, and that's what banks want to stimulate and push forward. And so I do think you'll get tiny little cuts, and they'll all be based around getting headlines and publicity, so they'll probably spread them out from each other, so the news will pick up on that. I think you'll get a few more rates that will go below 4%, but you've got to look at the fees on those ones as well. So all in all, I think it's a pretty good deal. I'm happy that the rates have started to come down. They have to start somewhere, and the fact that they've started now is good. So that is worth a celebration beer, in my opinion. So let me know your thoughts and comments. Are you shocked by this? I would say quite a few of you are shocked, because the video I did 2 days ago, most of you said this wouldn't happen. So do comment below with your thoughts and opinions. Do smash the like, do subscribe, and hit the bell notification. So hot here, I'm going to go for a swim. I'll see you guys tomorrow. Bye for now.